Hello traders and investors, I'm L.A. Little. I'm an institutional advisor, a professional trader, and the author of Neoclassical Technical Analysis. What I bring to the table on a regular basis is 3 decades of teaching and trading experience. Using the methods that I pioneered and have written about extensively, I show you and help you to understand the market via its testing process. I appreciate you being there and helping me to help others in their journey to become successful traders and investors. And so if you find value, like, subscribe, hit your alert button, and share. Hey folks, I'm just bringing this quick update to you. It's almost the end of the trading day, about 20 minutes to go here on March 12th. And what I want to do is just focus on the idea here that these markets are driven by oil right now. And the oil market is definitely the driver. They're headline driven. You know, so if I bring this back, and let me put it on a weekly, you can see here that 119 plus top on Sunday night, and then the spill down right now. It's coming back up, and this is kind of the echo bounce. Now, they're right up in an area where there is going to be sellers, and that's what's happening, right? They're testing, and they're trying to get over it. Whether they do or not, a lot of that's going to depend on what happens in the Middle East, right? Because we're headline driven, and being headline driven, you know, if this market sees that more oil facilities are going to be taken out, infrastructure, etc., then it's going to push higher. Now, what's that doing to the equities? Well, the fact that the oil market is driving things and the fact that the oil market doesn't want to fall is putting a lot of pressure on the equities. Here's today's trading. This is 30 minutes chart. I'm looking at the SPY here, and you can just see it. This is the Qs. This is the Dow. This is the XLF, all of them just drifting to the downside. They gap down, drift all day long. And they're not going to rally today, right? 20 minutes to go, it's just not going to happen probably. But the point I wanted to bring to you is I've told you for 2 months plus, it's just not a good reward risk situation out here. And it still isn't, and it hasn't been. You know, if I put up the Qs, what you can see here is, you know, these things pulled down, and let me get the right marker so I can show you. They pulled down here, and then they just basically been drifting to the downside. This 2 swing point lows down here haven't been broken. Right now, if they break, right, there's a shot that we could go after this one here. And as an investor, what you really want to see is you want to see a washout. You want to see these things break, and then you go down here and you break this one. Right, and it looks like the world's crumbling, right? It's probably going to be the buy, and especially if you get down to here. But I don't think the first bounce is going to get. I mean, the first push is going to get there. Probably gets underneath here if it happens, gets a bounce, right, and then something brings it down there. That's the more likely scenario if in fact we're going to break down and get lower. So if that's true, this is going to play out over a period of time. It's not going to happen immediately. It's not going to be like 2 days from now. SPYs look the same way, right? If I look at the SPYs, you got the same scenario that's happening, right? These things are just drifting to the downside. Now these, a little bit different setup in that they actually gave you a neoclassical tail. You had 3 swing point lows, all of them break, right? They broke on this bar, right? Then they bounce back up, right? And then eventually, 2 days later, here they are gapping down, going after the low. That's a regenerate. That's a retest, regen. And I talk about this all the time. That's typically what should happen. In other words, the first test should push lower, the odds favorite in all cases. And that's why you usually don't want to buy breakouts. There's a couple of exceptions, but in general, you just don't want to buy breakouts. You want to buy the retest. You got more information, and it's a highly probable thing that it's going to happen. If they do break down here, right, then we could get the push down to break this like I was just talking about, get underneath it, and then you get the bounce, right, and then you continue this roll. This is rolling, folks. So let's look at a couple stocks that look good. Palantir, right? There's going to be a time when it makes sense to buy. And you're going to want to know which stocks you want to buy. This has sort of that cup and handle going if you're a classical person, right? If you look at the classical setups. It's doing a bearish retest regen over here. It got over a swing point high here and here. And so, you know, the fact that you got over these, now you're doing bullish retest regens. Prior to it getting over this, I thought we could get a drift back down in here to buy, but this thing just continued to exhibit strength. Over here, it's trying to get above that swing point low. If it gets above it, which is 161.15, I believe, if it gets above it, which is just right up here, right, that would tell me that this bottom is probably in. And so even though it's had a tremendous run, right, this stock, maybe it's got another tremendous run left in it at some point. But it certainly looks like there's buyers down here. And worst case, it's some sort of a range, and that range is from 200 to 120, you know, 125 or so. So you could, you know, I don't like buying stocks in a weak market, but this is definitely one I have on my list to try and buy if we get some strength in this market. And matter of fact, you know, I don't want to trade, unless I'm day trading, I don't want to trade long and hold until we get some sort of a flush or we go farther out. And I'm not talking about Palantir, but I'm talking about the general market, you know, and we get that bounce situation, right, where the range is enough to trade and hold something for a week or two. Until we get that situation, there's no reason to try to trade a bottom. There's no reason to be FOMOing. It just doesn't make sense. The reward risk simply isn't there. It will come. It's just not there yet. So Palantir is one that's on my list. I was looking at IONQ, but you know, this one had a bullish retest regen here and it failed. And so I kind of marked it off my list. It's been very weak out here. It just isn't ready. It will be at some point, but it just isn't ready yet. What was the other one I was looking at? Oh, Tesla. I've been looking at Tesla. Tesla is going to be a sweet buy back here, folks, if it gets there. That swing point high hasn't been tested. That price point is 367.71. So this one's on my list. I've got several on my list. This is just a couple of them. I was looking at coin, but I think coin's just a bounce, and I don't think there's anything there, so I'm not trying to trade that or buy that in the dip. I want to buy things that give me a good chance of a nice big rally. If you look at the market and the numbers associated with, you know, how much has declined. Over here in my trading channel, you know, a good friend of mine, he wrote here that S&P down 415, right, percentage, but of the 503 stocks in it, they're down 18.9, right, the cap weighted decline across all of them. And so the index is only down 4% since as of 3/12, right, from 128, yet 18.9% on the cap weighted you know, the cap weighted decline on the S&P 500. Look at the NASDAQ. NASDAQ here is, what do we got at? Almost 6%, 18%. So what is that telling you? Well, it's saying that you have a situation where a lot of stocks have gotten really beat up. So when you do get that, you know, tradable bounce, right, something that's going to last a week or two, that's where you want to do. You want to have some of those stocks, they're really strong stocks, in your back pocket. And you want to be ready to buy those things when you get that reversal so that you can trade them for a week or two. But other than that, I don't think you want to be trying to look at something I'm going to hold for 6 months. Not yet. We're not there. Matter of fact, we're going to get there when we get down, going back to the SPY, we're going to get there when we get down to this level if we can. Right, this 606, 608 area, right? If this market can decline down to here, you know, so in other words, it rolls over, breaks the swing point low, gets a bounce, right? And that's kind of your week or two bounce, and then pushes, right? Breaks again and pushes. That would be the scenario. What's the setup for the bounce? Well, again, I'm going to blow this up so you can see it better because it's log, but the width of this bar, right? Assume it breaks, and let's assume we get down to, you know, maybe this little ledge right in here. Take that price point. That's 637. What's the top here? 675. That's about a 40-point move. So you're talking about what, 4% or so. If it moves 4%, you might get 15, 20, 30% on some of these stocks. That's the sort of scenario I'm talking about, right? And if you can get it to where it's going to have a chance to last a week or two, right, as it grinds back up, and those stocks just take off, it's tradable, it's workable. Until you get that, it's just not workable. The reward risk just isn't there. And that's what I've been trying to say. Okay, this is long. I'm going to let it go, leave it at that. Have a great one. See you.